Hej och välkomna till Investor Update. Idag med kanadensiska DevvStream, ett teknikbaserat ESG-företag som med initialt fokus på koldioxid adresserar en miljarddollarmarkand. Investor Update produceras av Investor Studios och är ett samarbete mellan Investor Studios, Investor Target, IR och Kapital, Stockpicker och presenterade bolag. Idag som sagt med DevvStream Corporation. Ni som tittar live kan alltid interagera med bolagsledningen och det gör ni genom att ställa era frågor i chattfältet. Vi kommer att hantera de frågorna i slutet av den här sändningen och efter presentationen. Då dagens bolag är transatlantiskt kommer sändningen att fortsätta på engelska. Hello and welcome to Investor Update. It's my great pleasure to welcome Carl Stanton, chairman from New York. He's chairman of the board and he's via link from New York. And then we have CEO Sunny Trin, and I believe you're in Los Angeles, Sunny. Is that correct?
Yes, that's correct.
Gentlemen, it's an honor and a pleasure, and please take it away.
Great. Thank you, Carlo. Good morning to those in North America, and good afternoon for those in Europe. As Carlo said, I'm Sunny Trin, CEO of DevvStream. As many of you know, DevvStream became the first carbon credit company to list on NASDAQ just over a week ago, so we're very excited about that. So Carl and I are here today to provide you with the first investor update as a NASDAQ-listed company.
And I'll start with some boring disclaimers. Today's discussion may include projections, estimates, or other information that could be interpreted as forward-looking statements. While these statements reflect our current views on future developments, they are subject to various risks and uncertainties that may cause actual outcomes to differ significantly. We advise against placing excessive reliance on these forward-looking statements as they represent our judgment only as of the date of this presentation. Please note that we are under no obligation to update or publicly disclose any revisions to these statements based on new information or future events. For a more comprehensive overview, we encourage you to review our most recent SEC filings. Sunny?
Great. I apologize, Carlo. I don't see our presentation. I want to make sure, is it up there? Great. Thank you. So thank you. So for today's update, we're going to start with an overview of the carbon credit market. Carl will then provide more details around our business combination with Focus Impact and its significance. And then I'll go through the company's business model and dive into more details around each of our three pillars. And then we'll close with a summary of our management team. So next slide, please. So before we dive into the DevvStream business model, I want to talk a little bit about just the market in general. And as most of you are aware, DevvStream is in the business of environmental assets with an initial focus on carbon credits. For those that aren't aware, carbon credits alone is already $1 trillion market. That's a trillion with a T. And what makes it even more exciting is that it's expected to more than double to 2.68 trillion by 2028. The reason why it's already so massive and still growing is because it's relevant to every organization, company, and country in the world. That's because carbon credits are a financial tool to help address climate change. And well, climate change is relevant to everyone. So when you hear about all these companies or countries making net zero goals, almost all of them are either purchasing credits or will need to purchase credits in order to meet these goals. The first milestone around these goals for many of these groups is 2030. This is why we expect the demand for carbon credits to continue to grow and really take off around the 2026 timeframe and beyond. So next slide, please.
Yeah, Sunny and I are really excited to be able to announce the merger of Focus Impact Acquisition and DevvStream. This was finalized about 2 weeks ago. This was the culmination of a year and a half of work and planning to position the company well for this date, to go through the rigorous regulatory processes that the SEC and NASDAQ require. So we're very excited to be at this milestone event. The capital that was raised, $43 million, really comes in the form of two forms: cash on the balance sheet and the form of an equity line of credit, which we expect to be accessible beginning early next year. So importantly, the company was able to acquire two strategic assets that we think position the business extremely well for the coming years and for the current environment. The first was a 50% stake in a carbon sequestration project, which we call the Monroe Project. And the second is the acquisition of over 3 million carbon credits, which forms a basis of the company's strategic offset portfolio. The company now is trading on NASDAQ under the ticker DEVS. There are 27 million shares outstanding, and we'll be providing more detail on all the assets today. Next page, please. Trading on NASDAQ is a milestone event for DevvStream. As Sunny mentioned, DevvStream is the only company trading on a national U.S. exchange. And indeed, it was part of the company's and the board's strategy to pursue this merger. It was part of the reason for pursuing this merger with Focus Impact Acquisition Corp. Questions about credibility of the voluntary carbon market, questionable practices, smaller unregulated participants, all of those have created what we believe to be unnecessary uncertainty in the validity of the marketplace. The core players, the core developers are all fine players and deserve to be treated that way. But unfortunately, there was this pall created by a small number of incidents. So we believe that the carbon market requires transparency and oversight, and both are hallmarks of national U.S. exchanges. So a very important event to be the first player on a major U.S. exchange. Next page.
So I'm really excited to share with you our updated business model. And as Carl mentioned, this is a culmination of 2 years of planning and hard work centered around our SPAC merger with Focus Impact and our listing on NASDAQ. We have 3 major pillars, which I'll go over in more detail. Before I dive into each of these, I do want to highlight a couple of key points. First, we were originally only a project development company, but by adding these additional pillars, we were able to diversify ourselves to create more opportunities and really mitigate our risk. And second, this gave us the opportunity to materially enhance our overall asset portfolio as well too. Next slide. So we now have 3 main ways to generate revenue. The first is acquiring strategic assets such as high quality carbon credits and then monetizing them. As Carl mentioned, we currently have 3.7 million carbon credits in our portfolio that we fully own. Credits similar to the ones in our portfolio typically go for anywhere between $5 and $25 per credit. Carl will provide more details on these credits on the next slide. We are constantly approached by project developers of all types, so we'll continue to bid out more projects and invest in and add to our portfolio as well. Our second pillar is where we invest in or acquire strategic projects. The carbon credit industry is mostly made up of smaller operators or nonprofits, so it's really ripe for consolidation. Being the only NASDAQ-listed carbon company makes us a very desirable merger partner, and consolidation along with our organic growth will allow us to extend our reach and to truly become a full end-to-end solutions provider. Our third pillar is where we identify companies with technologies or activities that are eligible to generate carbon credits, and we become their exclusive manager to generate the credits on their behalf. We then get paid by retaining 25% of the asset stream for the entire life of the project. What we found is that the majority of these companies either aren't aware of carbon credits, or if they do know about them, they don't have the expertise to do it themselves. And this is because the process to generate carbon credits is extremely complex and can take up to 3 years or more to complete. This pillar is extremely profitable for us since we're not investing in the projects themselves or the technologies. This is done by the companies that partner with us. So the only costs we bear are the cost to collect the data, validate the activities, and register the process, or register the project. As a result, the margin from this pillar is quite high. And one last point I'd like to make is that we really don't need to be successful with all 3 pillars for the company to do well. However, we do feel really good about all 3 of them. So, next slide, please.
Yeah, I'd like to echo that last point that what really happened with this transaction, it was the culmination of 2 years of thinking about how to position the business for the future. Historically, the company only was in that that third pillar. That was the basis. And that made a lot of sense back then because the growth of the voluntary markets and all the markets the company participates in was anticipated to be growing up and to the right with no end. And of course, with the disturbance that I mentioned and the questions about transparency, that caused this pause. So what do you do with that period of uncertainty? You take advantage of it and you position the business so that it can benefit. Diversifying across these other pillars is really the thing that we think is important for investors to take away today. So this portfolio, the first pillar, the strategic offset portfolio, this has been something that we've been strategizing for 2 years. How do we acquire a portfolio of assets of high quality, vetted projects that are on recognized registries? So these have already been vetted through many different steps in order to become listed on their registries, and then we go through another process of due diligence before we acquire them. So it just so happened that the timing was very fortuitous, we believe, for DevvStream. The disturbance in the marketplace I mentioned earlier created a low point both for traded volumes and for prices of all carbon credits. And specifically, there were groups of credits that were singled out and hurt the most. Nature-based credits would be the primary one. The nature-based credits form the bulk of the strategic offset portfolio, and they were also the ones that were subject to the questions about good business practices last year. So as a result, volumes went down dramatically, prices went down. We believe the company is now in a great position, took advantage of an opportunistic buying opportunity. If you think about what's happened in the time since that decline and today, the registries, the project developers, many of the participants in the marketplace have scrambled to find ways to bring validity back to that marketplace. It is the largest source of carbon credits today. So the redeveloped RED Plus projects is a great example of that, where they've been recertified and the projects have now gone through a more rigorous process. The company's biggest base of credits would fall into that category. So great timing for the biggest one. The portfolio also includes biochar projects. Now, biochar is a stable, carbon-rich solid. Think of wood chips as an example. They're made through a process called pyrolysis, which is a very highly controlled burning process. And the end result is the storage of carbon into the chips or the biomass or whatever the end product is. It's in high demand. Biochar is in high demand right now with very high prices per ton, in part because it fits into a category called sequestration projects. Sequestration is a fancy word for saying carbon storage. Now, before this project, the bulk of DevvStream's projects were not in sequestration, they were in avoidance. Those are the two big windows that you can go through in carbon. So big demand for sequestration, as a result, big demand for biochar. So in total, 3.7 million credits were purchased on November 6th. Over the coming months, the company will be developing strategies to monetize those credits, to utilize them strategically with other business acquisitions and other business ventures. More to come on how that will unfold. Next page, please. Now, on the prior slide, I mentioned the importance of sequestration projects. DevvStream had no access to those projects before, but had been planning it for quite some time. As I mentioned, the marketplace changed, where avoidance was less interesting to many investors than sequestration. Some of the transparency, some of the measurement problems are easier in sequestration projects. So we were lucky in being able to partner with the Monroe Sequestration Partners Group. It's a group based out of New York and Louisiana. They are seasoned oil and gas executives. Over the past 7 years, they've been developing a project that sits on top of one of the largest oil and gas formations in North America. That's called the Monroe Formation. Underneath that is the Houston Formation, which forms the base of the company's project. It's over 425 square miles in Louisiana, 3 different parishes. The way to think about this project is that Monroe will be developing wells and proving out the engineering for storage, for long-term carbon storage of CO2. What it does then is it finds emitters that are in the local area that need to get rid of their carbon. So think of refiners, for example, or other chemical plants, other people that are mandated to remove their carbon as part of their process. Monroe partners with those emitters. They have the storage facility, and they share two different things. The project develops both carbon credits, and it develops what's called 45Q credits. If you go to the next page. So 45Q credits refer to a section of the US tax code. 45Q credits are meant to incent emitters to remove CO2 from their process. It was actually meant to help companies that were in hard to abate industries. Think about refiners, steel, chemicals, cement. Those processes were inherently, it's hard to remove carbon as part of your process. So it was meant to provide an incentive for them to partner with somebody or develop wells where they could long-term store their carbon. So that's what they do. In this part, the actual tax credit goes to the emitter themselves, but of course they don't have any place to put it, so they partner with groups like Monroe, and Monroe shares in the tax credit. That's the first revenue. The current price per ton is $85 per ton. That was enhanced by the Inflation Reduction Act that was passed under the Biden administration. But that 45Q credit has existed since 2008, so it's been around for quite some time. There are questions about what might happen with the Inflation Reduction Act and the resultant impact on tax credits. We feel confident in the current setting of this program, and we believe that this is going to be a long-term value creator for the business. The other part of the other credit that comes out is carbon credits. Carbon credits are the same kind of traditional credits we were speaking about earlier. They're voluntary credits. They will be high-valued, we believe, high-valued voluntary credits because they'll be sequestration, they'll be easy to measure, and they'll be long-term in nature. So we're very excited about this project. Something very important about this, normally when we talk about carbon credits, the way we did the strategic offset portfolio, we own a credit. In this case, the company owns a credit and 50% of the project itself. So the credits will develop, the company will be the exclusive partner of the carbon credit for the carbon credit portfolio, and also it'll own 50% of the profits of the Monroe project. So this is why it's called a project and not called just a carbon credit.
Right. Next slide, please. As you can see from this slide, we have a huge pipeline of over 140 projects. There's no way we can work on all of these, so we've narrowed down to 16 opportunities that have the potential to generate over 30 million credits per year. In addition, we have 5 programs that we are developing and very close to being completed. With this approach, we register a specific activity across an entire region and then aggregate multiple participants. This allows us to register the program once and just keep adding to it. So, for example, we have an EV charger program for all of the United States. So what this means is that any EV charger company in the US can join our program and can start generating credits within days after being onboarded. So rather than having to spend a ton of resources and money and waiting for a year or longer, we can get them up and running within days. This also makes each program extremely scalable. A second example is our industrial facilities program, where anytime a factory or other type of industrial facility, anytime they implement an improvement that reduces their energy consumption, for example, they could be eligible to join our program and generate carbon credits that way. So imagine how many facilities exist in the US alone. Well, that's the size of our market just for this one program. And then our third example is our IREX, or International Renewable Energy Certificates program. I'll go over more detail in this in the next few slides, but this is another asset that we will be generating and acquiring as well too, and allows us to diversify further. Next slide, please. Now, I want to touch on Article 6 of the Paris Agreement with this slide, and essentially what that is it's the framework allowing countries to buy carbon credits from each other. Why is this important? If you take a look at the market today, it's already $1 trillion market, like I mentioned earlier, and it's made up almost entirely of corporations buying carbon credits. Now imagine developed nations such as Germany, Switzerland, Japan or even the United States needing to buy carbon credits to meet their net zero goals. Well, how much larger are each of these countries' carbon footprint and goals as compared to a corporation? And the reason this is so important is that it will add much needed regulatory framework, first of all, while significantly increasing demand and price for the credits. And why is it important to DevvStream? Most of the projects we have in developing nations are working towards Article 6 approval and allowing them to be, again, much more desirable and much more valuable as well. Next slide, please. So this is a summary of our overall business. We find organizations and companies that have technologies or activities that are eligible for carbon credits. If they don't have the expertise to generate the credits, which we find to be the case in most situations, we step in, manage the entire process, and we keep 25% of the credits. For those that are able to generate their own credits, we vet them out and either invest in them or help them sell their credits. We've developed relationships with corporations and exchanges like Expansive, for example, that gives us multiple channels through which we can sell these credits. One main takeaway is that the carbon market is looking for more trust and transparency. We have a proprietary blockchain, and by using that to manage all the data used to quantify and generate the credits, we provide that added trust and transparency. And then the fact that we're listed on NASDAQ and have all the regulatory requirements of being a NASDAQ listed company in the SEC, it further enhances that trust that's much needed in the industry. So this makes us one of the most sought after partners throughout the carbon market. Next slide, please. So as I mentioned before, one of the programs we have is around chargers for electric vehicles. Our first program, again, covers all the United States. If you take a look at the numbers, there are currently 192,000 public EV charging points in the US, with an additional 1,000 being added weekly. And less than 5% of these are generating carbon credits. So what is this worth? Well, a typical L2 charger, which makes up about 75% of these chargers, can generate up to $1,000 per year in carbon credits. Where it gets really interesting are the DC fast chargers. These make up the other 25%. Well, these can generate up to $10,000 per year. Since DevvStream has created the program, we serve as the project owner and bring on EV charger companies as participants. These companies agree to exclusive multi-year terms with us, where they keep 75% of the credits and DevvStream receives the other 25%. We've achieved significant market penetration already, with 7 definitive contracts signed to date and are currently in discussion with other EV charger companies. We also plan on expanding this program globally as well. Next slide, please. Another part of our plan to diversify, as I mentioned before, includes generating other environmental assets, one of which are renewable energy certificates, also known as RECs. So what is a REC? For any type of renewable energy such as wind, solar, hydro, or geothermal, RECs can be issued for every megawatt hour of electricity generated. On the flip side, when a company wants to claim that they're using renewable energy but don't have access to any renewable sources, they can buy 1 REC for every megawatt hour they use. As more and more companies want to say that they're using renewable energy, such as Amazon, the demand for RECs continue to grow. This can be seen in the 80% increase in REC redemptions over the last year. Next slide, please. On the graph, you can see how much the international REC or IREC market has grown over the last 4 years. This is why we're so excited about this market as well. And similar to carbon credits, we also have a robust pipeline of opportunities with IRECs, including several definitive contracts that are already signed. Some examples of projects we're working on include up to 1.3 gigawatt of solar in Macedonia that can generate up to 1.5 million IRECs per year. We're also working on 600 megawatts worth of geothermal in Indonesia that can generate up to 4 million IRECs per year. And similar to our carbon credit management program, DevvStream is driving project development with these IRECs, where we have exclusive multi-year terms and we receive up to 25% of the IRECs generated. And
I think one quick add-on there, Sonny, is that if you look at the where we believe DevvStream is different, DevvStream was a project developer. There are many project developers out there in the voluntary carbon market, but expanding into IRECs is an example of changing it to where it's not just about carbon credits, it's about environmental assets. And that asset pool is much, much broader there are thousands of programs around the world that are increasing daily, where municipalities are dealing with carbon in their own way. That creates an opportunity for individual marketplaces, sometimes very small niche marketplaces, but they're in need of a large-scale, transparent company like DevvStream to be an intermediary or to be the project co-developer. So this is an important step that I think it's important for people to see, to not just carbon credits, but expanding it into environmental assets.
No, that's a great point. Next slide, please. So this will be our last slide. I won't go into detail. It just gives you a snapshot of our team. I want to make sure we have enough time for Q&A. So Carlo, if you want to share some of the questions.
If you don't mind, just one point here, Sonny. So although it's easy to slide past a page like this, but DevvStream is comprised of seasoned executives. This is not a fly-by-night operation. There are many PhDs and inside this organization that are driving the thought process. The intent is for DevvStream to become a thought leader. Sonny, who's very modest, has been asked to speak at the UN multiple times because he's a recognized expert. As for my part, what we're attempting to do is to take advantage of what we see as this market slowdown and enable and use M&A, mergers and acquisition technology to drive growth. Now, normally it's obviously you have to be opportunistic, but you have to have a strategy around it. What I hope you see is that we've used the experience of our team to drive that portfolio of carbon offsets, to drive the purchase of the Monroe project. Those are examples, and that we expect there will be more of that that will become part of the fabric of how DevvStream operates, to become a merger partner of choice for companies that are looking for ways to grow their business, or perhaps that are finding it difficult to continue to grow on their own. We believe DevvStream will be a welcome home. I'm a private equity investor for 30 plus years. My last major corporation was at Invesco, where I ran the Western Hemisphere portfolio for them. And we're bringing that type of thinking to the PhDs at DevvStream.
Thank you, Carl. I'm glad you brought that up.
Right. Yeah. Okay. So we have a lot of questions, but my first is more of a statement than a question. And there's one or two questions regarding financial statements and so on. And as you have been listed, maybe we should forward any questions to your web page. Considering the SEC rules, would that be correct?
Yes. So the company is a timely filer on the SEC, and you'll be able to find everything that's publicly listed there. And we encourage you to look there. There are no projections in the presentation today by design, but as you can see, as you'll see in the company's financial statements, the company has heretofore been a pre-revenue business. The total addressable markets of its segments we think are quite large, and that has been the compelling factor for investors today. With the acquisition of these two portfolios that we mentioned, we believe it brings a very different, unique flavor and a much more tangible opportunity for monetizing them into revenue generation in the more near term.
And I will hook on to unique here because it's a good segue, almost as we have rehearsed it. But I'm trying to find a peer group here, and I see that unique is the key word here. Who would you like us, the market, to compare you with?
It's an excellent question. I'll play with that, Sonny. I think that the company should be most tightly linked to companies that are in the energy transition sector, simply because it's the biggest sector, it's the most built out for investors, and people will understand the nature of building the asset before it can be monetized. So it is infrastructure-ish, if you will. That will change, we believe, in the near term, but that's the way we would anticipate investors would look at it. There are other companies that operate on smaller exchanges in the market. They haven't made the transition that we've discussed here today about expanding it across different marketplaces. So unfortunately, being a leader in a market means that you're out there alone a little bit.
Yeah, and if I can add to that, Carlo.
Yeah.
Yeah, and I would say that, as we become more and more of a true end-to-end solutions provider, what you'll find is there's competitors in segments or pieces of it. There's companies that are investing into projects and streams. There are companies that are project developers, but really we don't see many, if any, companies that are looking to do the entire gamut that we run. And so you can pick bits and pieces, but like I said, nothing that all the way full end to end.
So basically, whenever there is a project or bidding for the carbon credits, it's different actors that you would compete with. Is that a way to look at it?
Yes, that's correct.
And I'll just take one question here on the fly, because I think you touched upon it when it comes to the Inflation Reduction Act, and that is new administration affecting operations. So we can start with that. And then the other one is dealing with carbon pipelines safety in municipals. So you got two different questions there.
Excuse me, I'll take the first one.
Yeah.
So the bulk of the Project Monroe, the majority of the revenue is anticipated to come through 45Q driven credits. So the question would be, will the change in administration limit that? I would just point out that the creation of 45Q credits actually happened way back in 2008. They've been around for a long time. The IRA increased the price of carbon credits, of 45Q credits from $45 to $85, and expanded the scope and increased the period of time by which projects had to be started. Now projects have to be initiated by 2033 in order to qualify for it. There's a lot of speculation around this. I would point out that most of the beneficiaries of the Inflation Reduction Act are in states that are Republican held. This project is in a state that voted for the incoming administration. I can't predict past that, but we take comfort in the fact that 45Q was not created under the Biden administration. It was created a decade before, and the purpose of it benefits companies that are what you traditionally say are tough emitters that are in red states. Sorry, I missed the second part of that question.
Yeah, the question was more carbon pipeline safety in municipals. So whether there's a genius to that question, I wouldn't know. But you're obviously the local expert there.
Well, this is not the first project of its type. There are many projects out there that do carbon sequestration. It is expected to be a very large industry. I would point you to Occidental Petroleum, which has been using these projects for quite some time. The emitters, so think about a refinery or a steel plant, what they have to do is they have to install equipment that will collect the carbon, and then the carbon has to be transported either through a pipeline or through truck to the facility where it's then injected in the ground. That's the process. So the process of moving CO2 via pipeline is old technology. There are Louisiana is riddled with pipelines. There are many of them down there that Monroe would have availability to use, and of course the trucking would just be a more expensive thing. These really come down to more optimization of the logistics of moving the carbon as opposed to, in our mind, the safety of it.
Yeah, and I'll add one more thing, Carlo. So I have an engineering background. I actually did spend a little bit of time working for a gas company as well in Southern California. And what we're talking about is sequestering inside reservoirs that were already there naturally, that were storing natural gas, which is much more combustible than CO2. At the same time, as Carl mentioned, the pipelines is very old technology that, again, was used for natural gases and much more volatile, much more combustible gases as compared to CO2. So as far as the safety is concerned, we feel that there's very little concern about that, and this is something that we feel really comfortable about.
And also, you mentioned the pipeline, and it looks like quite huge. Would you give us a feel for, let's say, a sort of, let's say, backlog going forward? And also, I wonder, because you have three pillars to stand on, how do you divide your knowledge and skill when you evaluate a project that I would assume includes in your pipeline?
Yeah, so that's a really good question. A lot of it's very opportunistic, and the fact that we have a very strong brand and we're also a NASDAQ listed company, we get a lot of inbound requests. So that's really helpful, and it allows us to be really picky. So we look at several areas. Number one, is this a legitimate technology or legitimate opportunity that will generate carbon credits? Secondly, is this something that would be widely accepted? Is this a carbon credit that would be desirable as well too? And is it impactful? And then third, we also look at ROI. How much do we have to invest, if any at all? And what's the size of this opportunity? Not every opportunity is the same, right? So there can be a technology that generates 10,000 credits a year versus one that generates 10 million credits a year. So obviously we'll go towards the 10 million and then allocate our resources accordingly. And then the last is, what's the likelihood that it'll succeed and how long will it take to succeed? Some technologies still need to be vetted out and it might not happen for another 3 years, where there's technologies that already exist today, they've proven, and then they need carbon credits in order to help push them over the edge financially.
And then maybe I'll add on to that. For projects, it's the same type of process you would expect to see in a private equity firm. It's a pipeline of opportunities that gets vetted, financial due diligence, strategic and legal due diligence, all the way down to the end, with a real focus on ROI and the net MOIC, or money returned for the company. So we think that's a very interesting way to do that. It's just a way to effectively efficiently use the company's capital base when we're looking at large-term projects. One more thing is that, unlike a private equity firm, is that there is an element of diversification that the management team looks for. We're looking for something that allows us to be prepared for short-term changes, such as an administrative change in a municipality or a government, but allows us to keep the long-term focus. We are very much believers that the voluntary carbon markets, the carbon markets in general, including IREX and all the other ones we've mentioned today, that they're critical to meeting the long-term goal. And although we can't predict exactly when that inflection point will happen in the markets, we do very much believe it'll happen.
And can I expose my ignorance here then, and just ask you, if there is such a thing as let's say an average project and an average timeline before you get some sort of revenue on it?
I wouldn't say that there's an average, just because carbon credits it's such a broad market where there's all different types of technologies, different types of nature base. So the way we look at it, like I said, is around the ROI, but also I want to mention that we have our programs. So if there's a technology or participants that will fit into our program, which is already close to being up and running, then the barrier and the cost to enter is very nominal. So even if it's relatively small and it fits our program, we can roll it in and add the participants into our program and start generating credits, like I mentioned, within days sometimes. So it's hard to say that there is an average, Carlo. And it's not being ignorant. It's a market that not many people are familiar with, and I think people are becoming more familiar with it because of the size. When you talk about $1 trillion market, more and more people are getting interest.
Carlo, I think it's. I just want to make this clear. Sometimes, because of the complexity of the market, it seems like a black box, that there's no real math or no real regulatory. That's not the case. There are registries. There are a handful of registries that I think Verra, for example, which control the bulk or are responsible for registering the bulk of carbon credits that exist. Those registries have agreed to methodologies. So the methodologies are known. They're thick documents that explain exactly how carbon is calculated, how the savings are calculated, and how it'll be measured. So these are known to people that are in the profession. DevvStream's job is to take that very complex thinking and bring it to corporations or other developers and apply it. So part of what Sunny's saying is that if there's not an existing methodology, then that might take a long time. It might be worth it. It might be big enough to where the company would say, this is necessary and it's going to have a very big payoff for our investors. We should pursue it. But in general, there are hundreds of methodologies that are already approved that just need to be employed into the corporation's needs at that time. So it's not made up. It's just a complex link, like any other new technology, new industry. These terms we believe will become much more known to investors, and it'll become a lot more obvious.
And I would take it that the seal of approval really here is the NASDAQ listing, because at the end of the day that will lead to reporting, and one could look at the market, and that's probably the idea behind the listing. Would I be correct in making that conclusion?
Yeah, that's true. We believe that you always hope that the stock market reflects the potential. I don't know if it's an accurate gauge, but it is a fair gauge. And so part of what we're trying to do is explain this new story, explain the new DevvStream. There is an issue in part because DevvStream was public on the Canadian exchange, the CBOE exchange, and it had a very small float at the time. A very small amount of shares would trade per day. That changed dramatically, and there were a number, the number of shares traded multiples more than they did prior to it. But it had a little bit of a legacy impact, in our opinion, about how people viewed it from the prior share price. So I won't say anything more about stock than that, but that does weigh a little bit in our mind on how people view the stock price.
And if I look at the operations and your three pillars, it seems like it's a fairly complex material, and you are unique. So obviously, the core assets here will be the knowledge and the key personnel. How do you keep key personnel?
Everyone is incented by both a combination of short and long-term incentive. So the way you would expect most traditional public companies to be valued, including stock options and RSUs, are employed heavily here. Sunny and I, for example, are large individual owners of DevvStream and very big fans of it. We also are subject to lockup agreements that are publicly disclosed.
So you have a lot of skin in the game, and you put your money where your mouth is.
That's correct. But then on top of that too, the team that we have there, and Carl, myself, we believe in our vision and our journey, and that we feel that what we do is extremely important because, like I mentioned before, global warming is relevant to every single individual in the world. Carl has kids. I have 3 daughters. I want to make sure that the future is better for them than it is now, and so are our team members. If you look at some of the team members, like our CRO, Brian Went, he developed started a company with a alternative fuel engine that they developed back in the 90s. So they've been doing these type of green impact projects for quite a while, and so they believe in what we're doing as well. So yes, there's definitely financial incentives, but there's also the belief in what we're doing and trying to make the world a better place.
And newly listed here, and given the fact that we all have to follow the disclaimer here, but what would you like us in the market to look for you for the coming quarter? Are there any specific key metrics that you want us to keep an eye on?
Not for the next quarter, no. We would point people rather to the next half. We, as Sunny mentioned, some of the projects that Sunny highlighted. So remember the 3 pillars. The first pillar, I think I mentioned that the company will be announcing plans of monetizing and strategically using the strategic offset portfolio in the coming months. The Project Monroe is expected to become operational in 2027. However, there are multiple milestones that are with demonstrable results that we will be able to share information on as we meet those milestones. And then the third one, when it comes to the development projects that Sunny went in detail about, for example, the EV charger program, you'll see those milestones. So what we intended to do today was to lay out, this is very different. Unlike just a company with a big TAM on the development side, there's now big asset bases there in the form of the Monroe project and in the form of the strategic offset portfolio. That's new, and it was added since the closing.
Yeah, so it's a new and a unique company, and if one would like some further information, then one should go to the webpage. I take it.
Yes, that's correct.
Yes, and there, the filings are available where there's more detail. Of course, we are very investor friendly. We're open to conversations with investors. So we would like people to feel like they were well informed on an industry that's still in the early stages. And of course, as Sunny mentioned, we're very interested in talking to people who have the same mission that we do about trying to do something that the planet dearly needs.
Excellent, thank you very much. So, Carl, Sunny, it's been very educational. It's let's say it's not an uncomplicated topic and subject, and you are unique. So it takes a while to get the head around, but the first mover will have a head start. That's at least how I would look at it. So thank you very much. Wish you the best of luck, and we will follow this space and watch it closely. Thank you.
Thank you, Carlo.
Thank you very much.
And we will say thank you to all you and even the Swedish viewers. Där säger vi tack och på återseende. Hej då!